Good morning, YouTubers. Hope everybody's having a great day. Got a kind of an exciting video, I guess, if for people that are wondering, hey, when's silver going to go up? What's going to happen? A lot of people waiting, a lot of the financial analysts and stuff, they're all waiting to see what's going to happen in March with the interest rates. I had a subscriber ask me a question about the interest rates, and I figured that would be a good topic to actually talk about this evening. But before I start talking about that topic, I have to ask you guys more of a please try to help me out here. So please try to help me out by hitting that thumbs up button. So I just got my report from YouTube. YouTube says my channel average is actually 20% thumbs downing the video. So my channel average was 95% positive, 96% positive. And all of a sudden, I'm down to an 80% positive rate. And I'm like, what in the world? Where are all these negatives? But you guys are seeing, if you guys have been reading the comments, you're seeing a lot of negative comments on silver. And I don't know where it's coming from. It's crazy. A part of me finds it interesting that there's that much negativity, negative people about silver that are actually watching the channel. Now, I'll be the first one to say, if you're negative on silver and positive on gold, you're going to be all right. You know, when I talk about silver, a lot of it, I'm pro gold, I'm pro silver, but a lot of it is because a lot of the big channels, they don't talk about silver. I mean, I watched a interview with Steve Forbes a while back, and he didn't even mention silver. And I'm like, what in the world? They all talk about gold. And I know someone out there is probably typing a comment right now. There's a reason for that. You know, I'll be the first one to say gold has done great. Gold is a great investment in my opinion. But silver is way undervalued. I don't want something that's almost at an all-time high. I mean, technically, gold is at an all-time high. Silver, not even half of its all-time high. Eventually, we're going to see the pop in silver. And when that comes, a lot of people are going to miss out on it. And to them, I'm not dissing anybody. I've never came on here and dissed anybody's investment idea. Even Bitcoin. Some of my close friends on the channel are big into Bitcoin. And, you know, I've done cryptos. I understand cryptos. I just want to be in a hard asset right now. With everything going on, with the world as messed up as it is, a hard asset is where I want to have my money. Now, I'll be honest, you know, real estate, I still hold some. I used to be big into it, but I sold down. I was up to 7 properties. Now I'm only down to 2. I sold off a lot of that because, you know, even that seems like it's at an all-time high. I know some people out there are going to say inflation's going to keep going. You believe that, right? Yes, I do. And so it only makes sense that housing prices can go even higher. However, if the interest rates go higher, then the housing prices has to come down. So if you enjoy this video, please take a quick minute, leave me a comment what you think. Leave a thumbs up button on this video. If you're a close follower of the channel, start trying just to hit those thumbs up buttons. I know more people enjoy the videos than are hitting the thumbs up, but it's easy to forget that. So help me out. And with that, that's a great segue to kind of jump into interest rates. Because, you know, so interest rates are a funny thing. A lot of people don't understand how much of an impact that could have on silver and how it can have an impact on the economy. They see the interest rates. I've heard some people say they didn't care what the interest rates do because it doesn't affect them. But the truth of the matter is the interest rates, really what Jerome Powell does affects us all. If they kept doing back when they were doing 0% interest rates, that's when we were really seeing the really crazy inflation start setting in. So they had to start raising the interest rates. And when they raise interest rates, the free money kind of goes away temporarily. I mean, the money that's already in the system is in the system. But if all of a sudden now I've got to pay interest on my loans, a higher interest rate, you know, I'm less apt to want to risk money. I mean, I remember one story where I had borrowed like $50,000 or $60,000 from a credit card only to put it in the 2008 stock market crash. I pumped it all in there, and family and friends all told me, "You're a fool. Why would you gamble your money like that?" To me, the stock market at that point in time was way undervalued. In 2008, it took a devastating blow. And it was just easy money, essentially, in my opinion. Now, I ended up not taking long before I sold everything I had bought and paid back the credit card and was able to keep the difference after I paid my taxes on it. Well, technically, I got to keep it before, and then at the end of the year, I still had to give Uncle Sam his taste. That's just the way the world is. You know, so lower interest rates. Now, I know a lot of people are going to say that's foolish. That's foolish to do something like that. You realize if the stock market plunged and you lost everything, you'd be making a payment on that credit card the rest of your life. Now, there's two ways to look at that. The first one being, at the time, I had 7 houses, and it's an unsecured loan on a credit card, and money was pretty cheap. And so here's the thing, 0%. A lot of you probably seen, 0% for 1 year. I don't see that a lot right now. I used to see it all the time. But, you know, a lot of that's coming down to now they're raising interest rates. There's not no free money out there. The higher the interest rates go, the more likely it is that companies will sell some of their stocks and pay down any bills they're paying interest on. They don't want to be paying 5, 6, 7, 8%, whatever, more and more and more on their loans if essentially the interest rates keep climbing. They would rather just pay that, sell some stock off, especially with stocks kind of up there in price. But the problem is, I believe that Jerome Powell and this administration does not want to see a sell-off in the stock market. It's an election year. If there's a sell-off during an election year, it makes the current administration not really look like they're doing their job properly. But the truth of the matter is we almost always see some sort of a sell-off during election years. Now, we haven't seen a devastating one yet. It doesn't mean it's not coming. With that being said, so he's hesitant on, does he want to raise interest rates more to fight inflation? Because inflation is up there. People are complaining about it. People are complaining about higher prices. And now they're really in a bind because with voters complaining about higher prices, and then you have voters will complain if the prices come down and the stock market gets devastated. They're going to complain about that too. So they're kind of in a catch-22 on which way they want to play that out. Now, next month is the end. At the end of next month, it's the end of the first financial quarter. And during that time, you see a lot of short covering. So people that have been shorting silver, usually they're going to have to cover those shorts. With that happening, who knows how this is going to play out. In order to cover, they would normally need silver to dip down enough to cover what it was the beginning of the year. However, silver's a little higher right now than it was the beginning of the year. We've kind of been seeing, we saw a good jump, and then now it's been kind of fizzling back down. So I'm looking right now, I'm still looking for an opportunity to pick up some silver at $21.50. Anything under $21.50 would be a gift. I think we will see it. And the big question, though, is all on what is Jerome Powell going to do next month? Is the Fed going to raise interest rates, or are they going to lower interest rates? Now, I've already explained if they lower interest rates, you can expect higher inflation, but a solid stock market to maintain because people can gamble more money on loan, on IOU. If they raise the interest rates, people are going to have to pay back some of the money they owe because they don't want to foot the higher bill. But here's the thing. That slowing down of spending money means there's less money circling around in the world, and therefore less money floating around means less stuff's getting bought, which means prices have to come down because less of it's selling. With that being said, though, It's going to be interesting. A lot of people, everybody wants to know what's the Fed going to do. Nobody knows 100% this early what they're going to do. They say they want to bring them down. They're expecting to bring them down. But recently, Jerome Powell said, you know, inflation is sticky. It could last a little longer than we expected. Please be patient with us. Now, that's a sign of they don't want to bring them down. So it's going to be interesting. The safest play is just to keep them where they're at and say we're going to evaluate it in the next month or two, and then we'll decide more at the next meeting. That's the safest bet, and in my opinion, probably the most likely outcome. Now, how does this affect silver, though? So if they lower interest rates, inflation is going to continue to go higher again. And then with inflation going up, you'll see prices go up because money gets cheap again. Now everybody knows they're going to want to get into silver. And some people say you can predict it before the meeting based on what the stock market does, what silver does, what's going on with gold. That's the predicting positions ahead of time. Now, if they decide to raise interest rates, well, raising interest rates is going to make the dollar stronger. And it makes the dollar stronger, and therefore you're going to get more silver for your money because it's a stronger dollar. And then essentially we'll see the silver price come down is what that's going to come to. But the question is, nobody knows 100% what's going to happen. Now, a lot of people ask me, not a lot of people, but a specific comment that I had asked me, well, if we go into a recession, what will happen to the interest rates? And that can be a tricky one because they're still fighting for the economy and they're fighting to keep inflation down, and it's an election year. So the stuff that happens this year is not 100%. Now, my honest thoughts are if we go into a major recession, interest rates will probably have to come down, and they'll blame the inflation on something else. They'll blame it on a cough, coming back around again, maybe in the winter months, or they'll blame it on some kind of other major dispute overseas. I'm walking a fine line to not say anything bad. Kind of like we have a dispute going on in Europe right now. We have a dispute going on in the Middle East, and maybe at that point we'll have a dispute going on in Asia. And with all those disputes, they can say that that's affecting shipping, and therefore it's not inflation, it's more basically the shipping. It's slowing down shipping. There's a lot of different things that they can blame, and I'm not convinced that any of it is legit. And my time's about ready to run out, so I've got to kind of cut it short here. But they're looking to blame something else other than printing money. The more money they print, the more inflation happens. So with that being said, please take a quick minute, hit that thumbs up button. I only have 13 minutes and 33 seconds, so I got to cut it. You guys have a great one, and I hope to see you guys again on Tsquare Talk. Take care, everybody. Have a good day.